Ladies and gentlemen, we are about to start our fireside chat with Mr. Idan Jaan. Good afternoon, ladies and gentlemen, reporting live from Banking Transformation Africa. My name is Khamutsamamele Mutsidi, your host for this afternoon's fireside chat. With me is Mr. Idan, and he will just briefly introduce himself in terms of who he is, where he's from, before we get straight into it.
Thank you for having me. So yeah, my name's Idan Jaan. I co-founded a fintech startup called Fundrr in June 2018. Our sole purpose is leveraging technology and alternative data to provide working capital solutions to small businesses in South Africa. So our loan sizes range anywhere from 20,000 Rand all the way to 5 million Rand in size, 3 to 12 months in term. And we analyze cash flow patterns of the business and therefore tailor-make either a bespoke debit order solution to best fit the cash flows of the business, or we enter into strategic partnerships where we do split payments of potential future inflows to settle the debt obligation, which I'll talk about in more detail.
I like that because, they say without cash flow, without cash, you actually can't flow. And I see you solving a very pertinent problem in South Africa and also on the continent for small, medium enterprises. Now, I want to give us some statistics with regard to the landscape of technology companies. If you look at companies, for example, like Meta, Alphabet, Apple, Microsoft, and Amazon, in total, their revenues in 2021 was about 1.4 trillion. I'm going somewhere with this. And then you realize that the wealthiest man in the world is Mr. Elon Musk with a net worth of more than $219 billion. And then you look at the African economy, and it has a GDP of 2.7 trillion US dollars. But this is for a comprehensive 54 states. And then you realize it's even half of those technology companies. Where am I going with this? The richest people in the world are actually technology companies. They were founded and they're in technology. Now, I'm asking myself, could it be that here in Africa, we need to leverage of technology to literally catapult the economic situation, to ensure that we have young people as Mr. Ade stood here as describing Kuda. We realize that we need more of those. I saw an example of a young man from Nigeria who founded the company Flutterwave, and they are worth more than $3 billion US today. Is that a problem that you're trying to solve to help us find that sweet spot, that unicorn, and somebody who can literally change the trajectory of the continent?
Well, yeah, hopefully. But I mean, our sole purpose is more about providing working capital and essentially liquidity to small businesses, because there's currently in South Africa supposedly a 60 billion Rand gap, a funding gap, where small businesses just simply cannot access credit either quickly enough or more inclusively enough from the formal financial sector. So it leaves a huge kind of, like I say, a funding gap for fintechs to come in and actually solve a problem by giving them funding. The National Credit Regulator states in South Africa that most businesses do not last more than 2 years because of inability to access funding, and SMEs currently in South Africa employ more than 60% of the workforce. So we are providing essentially a lifeline to the backbone of the South African economy.
I love that, because what I'm picking up is that you're looking at closing the funding gap. In terms of your processes, how does that work in terms of getting people access? You just mentioned that there is about a 60 billion Rand gap. How do people then come in and get that access, and how do you enable to bridge that gap?
Yeah, so I mean, we leverage heavily on technology through the use of API integrations and alternative data and alternative credit models. We allow ourselves to provide funding to businesses in less than 30 seconds. Now, this is something that has never been seen in the country before, and we do this mainly through strategic partnerships. What I'm talking about strategic partnerships, we have a strategic partnership with Telkom, whereby on a monthly basis we get access into their full database, anonymized database, by understanding the telco spend of certain businesses and therefore understanding their viability to access credit, and we're providing pre-approved offers to them. We have a partnership with South African breweries where on a monthly basis we analyze purchasing data from a lot of taverns and shebeens in townships and therefore allow ourselves to provide them with credit. We have a partnership with Yoko where we on a monthly basis get access to their whole base of transactional data and understand what the revenue of these small businesses are. And with that, we allow ourselves to provide funding to them. We also have a partnership with Ikoka. What I'm trying to say is we have a direct-to-market product whereby businesses can log online, go into our website and provide and complete an application process and get access to funding. But our main focus is partnerships. If you actually leverage partnerships in the right manner, you're able to get access to a wider group of businesses, you have more data on them, and most importantly, you can provide quicker capital in a more seamless and frictionless manner.
I love that. Providing quicker capital in more seamless and really quick manner. Now, my question to you is that there is an entrepreneur sitting in the township or sitting in a village, and how then do they get access to your services?
So usually what happens, and this is like the holy grail, right? We are trying to access the informal sector. How do we provide funding to businesses in the informal sector? Now, this is a problem that I think a lot of great minds in the country have been working on and trying to penetrate. Obviously, these guys, I mean, they banked, but they don't have a digital footprint, right? So meaning that even if I create like an online application form for them, will they be able to go online, find me, apply, upload all the necessary documents in a tech-savvy manner? Most of the answers are no to that. So like I said, what we do is we really leverage off strategic partnerships and with the help of Telkom, whereby we created a white label product for them called Telkom Lend, and SA Breweries, we are actually able to get access to this informal business sectors through SAB, for example. So we're leveraging our partners' network to access businesses that otherwise we would not be able to access.
That is so incredible, because when you speak about companies like SA Breweries, at the moment they're called AB InBev, they've got a whole reach on the continent. So with your strategic partnerships, are you reaching people outside of South Africa?
So currently we're focusing just on South Africa. I believe there's a great deal of work that we still need to tackle here. I mean, we're just over 4 years old, the business, so I don't think we've mastered it enough to go overseas. But essentially, we're building a backbone and the skeleton to potentially branch overseas. But for now, we feel like we have a lot of work to do still in the country.
Okay, I love that. Now, I want to understand, in terms of, you mentioned that for you to gather the data, you use AI. Can you really go into depth in terms of how you do that data analytics and what is it that you get out of the data so that you're able to have a business case?
Yeah, so we've developed alternative credit models whereby we analyze more than 120 different data points from 14 different data sources in order to reach a decision. Now, the way we gather the data is either through API integrations or customers uploading documents onto our platform. What we do, we take that data, we dissect it, and we run algorithms to find out affordability metrics and essentially our proprietary Fundrr score credit model. And with that, we're able to use both alternative and mainstream data in a really quick manner to reach a good decision.
Oh, that's fantastic. Mr. Gill earlier was indicating about ITS credit with regard to how they literally go to the most rural parts and provide credit. I want to understand from your point of view, when you provide credit, how do you mitigate the risk of getting, let's say, because if I heard you correctly, you said that you provide them with loans. How do you mitigate that risk?
So what we do is, I mean, the risk, we obviously analyze the risk on our side. We have, like I said, we have a mature credit model whereby we kind of stand by the score that it gives us, and that is we take the risk on our own balance sheets, that whether business or goes sour, or whatever it may be. So we have our own metrics to determine whether we believe the business will be able to afford to pay us back. But some of our other strategic partnerships, which is really interesting. So, like for example, with Yoko, what we do is we provide working capital to the business based off its Yoko transactions. And what we do is we actually purchase a percentage of the future sales, meaning that, for example, if we provide funding to a particular merchant, we go into a contractual agreement with them whereby we say we will deduct 10% of every future transaction that you make on your Yoko terminal, and that way that 10% of every inflow will go back to settle the facility that they borrowed from us. So that really helps us in terms of risk, because we're allowed to open the taps a bit more in terms of risk, because essentially we are first in line for the collections, right? So let's say someone goes into this particular merchant and he swipes for 100 Rand on his Yoko terminal, 90 Rand will go to the merchant and 10% will go to us to settle their facility. So it's kind of a risk-based model that we take with some of the merchants, whereby we say, if you're experiencing slow revenue month, we collect less. If you're experiencing like a really strong seasonal kind of revenue month, we'll collect more, and then you'll get rid of your debt obligations quicker. Whereby the fee is fixed up front, so we don't charge per month. So it's not an interest-bearing facility, it's an upfront finance charge that we charge them. So whether they settle early or late, it doesn't actually matter.
Okay, so when we started, we wanted to understand with regard to your process in terms of how you get the money. The conundrum is that when you're looking at small businesses, they don't have proof of funds. They don't have guarantees. They don't have anything to prove that their sales are actually moving. How do you step into such an environment, provided, as you indicated, that it's a very risky business, but then what mechanisms do you have in place for proof of funds and securities as people take up a facility with you?
So, I mean, we only target banked customers, so we do need some sort of digital footprint on the merchant, whether it's bank transactions or whether it's some sort of wallet transactions, depending on the integration that we have with that particular payment provider. But you know, when we built the business, we wanted to make sure that we differentiate ourselves from the banks. Now, I'm a big fan of the South African banking system, but I don't believe that it caters for the small business. You know, the average deal size on our book currently is 148,000 Rand, so just under 150,000 Rand, which usually is 100% of the merchant's turnover. So we are looking at merchants, our average merchant on our book does 100 to 200,000 Rand a month in revenue. Now, we needed to make sure that our credit models are really aligned to those types of businesses, because those types of businesses cannot get access for funding through the banks because they don't have audited financials, they don't have a debtor age analysis, creditors age analysis, they don't have the latest management accounts, they don't have enough assets to support the facility, they can't sign surety, they can't sign guarantee for it. So we really needed to make sure that we flip the whole requirement upside down. And how do we create a credit model with an accurate decision based off the minimum, bare minimum requirements of documents, which is just essentially 3 months bank statements. So either make a decision through the bank account or through the payment provider or whatever it may be, as long as we have some sort of digitized transactions on the business.
Okay, I like that. And now my other question is that looking at the HCR, the National Credit Regulator, they've got really stringent rules from a lender as well as a borrower perspective. Where do you find yourself? Because if I'm hearing you correctly, you do very unconventional methods, not as per the banks. But then how do you then fit it into the middle so that you are in line with the regulatory authorities?
Sure. So I guess the regulator, you know, it's very focused on the consumer. So it's very focused on personal loan, consumer loans, which we don't touch. So we only provide funding to businesses, and we always scoped out of the National Credit Act simply because we do not provide funding to businesses that do less than R1 million in annual revenue. And also the way we structure our product is it's not a loan, it's a sell and purchase agreement whereby we upfront, we buy a portion of their future sales. So we're essentially providing them with a facility whereby we analyze the past 3 to 6 months back, how much they generate in terms of revenue, and therefore we buy a portion of the future sales, whether it be 5%, 10%, 15%, and that way we legally kind of bind ourselves into the business. Like I said, it's very aligned, right? Because if businesses do go through a very treacherous, like COVID, for example, that's a perfect example. Our product was so great during COVID. Why? Because a lot of the businesses had to take payment holidays. A lot of the businesses had to stretch their facilities, and they were not able to settle us within the upfront kind of term that we provided them. And our product did not bear interest over those terms, right? Because we have an upfront finance chart. So for instances like that, our product is really great for the SME.
I love that. Now, I hear you speaking about the SME with very high regard. So what is the future for your product? Because as you said that you're still trying to fully establish your footprint here in South Africa. What do you envisage to see your product do as Fundrr?
So I think one of the most important things is we're just trying to provide as much capital as we can into the economy. I mean, we're still young, we're still small. I mean, we only do R250 million a year disbursements into the market. So in the greater scheme of things, it's not where we need to be. You know, obviously we need to do a lot more than that. But, you know, looking back at, you know, we launched this business in June 2018 with, you know, we bootstrapped it off our own personal savings. So for us, that's a major accomplishment that we are able to do that, to do these numbers. So every year we're growing, and basically our number one goal and priority is to disperse and help as many businesses as we can, because that's our sole focus, right? That's our core product. We don't want to deviate from it at the moment. I think there's a lot of things we can do with SMEs. I think as our product becomes a lot stickier, I mean, over the course of the SME's lifetime on our books, we do anywhere from 4 to 7 disbursements with them. We have over 80% retention rate on our books. So once customers use us, they'll end up getting retained by us because they keep on using our facility. And once we have such a sticky product and a good base of SMEs that we have good payment profiles on, we actually understand the business, we could come up with a lot of more potential additional add-on products to them down the line. So we have a few things that we're working on, but for now we just want to keep our core focus on providing them with capital.
I love that when you started, you literally bootstrapped it and grew it to what it is. Now, when I started, I said, I'm looking at companies like Flutterwave and saying, I want to see the next unicorn literally come out of South Africa. Nigeria has beat us to it, and we've got a lot of young entrepreneurs coming out of Ghana. East and West Africa are literally surpassing us. Do you have visions of maybe having a unicorn come out of South Africa with what you're doing?
Hopefully, yeah, you can only hope, right?
Right, because the thing about it is, if you look at Mr. Ade and his product, they could literally beat any South African, you know. So we are hoping that we don't play catch up, but actually we lead. And then with that, I mean, we have such a high youth unemployment rate on the continent and even here in South Africa. How do you envisage the product that you provide to help those young people who might have an idea, but they don't have any line of credit or any information that can, or digital footprint? How do you then tap into that? Because Africa has a very young population, and we want to make sure that the young people get as much opportunity as possible, that the SMMEs get so much access to information and opportunity. How do you tap into that, solving the bigger problems that we're facing?
So I think the product that we provide is a stepping stone to solving youth unemployment, right? Because what we do is we're providing a lifeline, we're providing working capital to SMEs. Like I said, SMEs employ more than 60% of the workforce in the country. So by us just keeping the lights on to these small businesses, we allow them to continue to employ people, we allow them to grow. I mean, our facilities are, we like to call them growth capital, because we never provide financing to a business that's obviously trying to, sometimes we've done it, but mostly it's not about settling past debt and someone that's in a very bad situation. But we provide growth capital. If someone wants to buy additional stock, if someone wants to renovate their restaurant or shebeen, or if someone wants to expand, and so with that comes employment. So I think what we do is essentially solving the unemployment crisis, hopefully.
You know what I love about you is that you became an entrepreneur, solving your problem, but you're solving so much bigger. It's tapping into so many things. I just want to now open up questions to our audience, because they're doing some phenomenal work, and I just want to congratulate you on what you do. So I want to open up to our audience if they've got questions for Mr. Idan with regard to the product that Fundrr has, and how, thank you so much.
Hi, no, it's a really interesting model. What's your funding model, if you can share with us? And related to that, what are your average percentage of approval on rebuying into the facilities?
Sure. So our funding model is we raise capital on our own balance sheet. So we go to investors and funds, and we raise debt on our own balance sheet. And then we take that debt and essentially we re-lend it onto SMEs. And the spread in between is our revenue, right? So acceptance rate, conversion rate, we have a 20% conversion rate, which is extremely high. We used to have a 5%, now we have a 20% conversion rate. And like I said, our retention rate is what really drives the business model with re-advances, right? So once we bring a customer onto our books, we have an 80% retention rate. So 4 in 5 customers land up taking additional funding. So once the customer pays back 30 to 40% of his facility, we have the ongoing data on them to pre-approve them and provide them with additional funding, and they land up staying. So 4 to 5 businesses actually land up staying on our platform. And so we essentially borrow capital from funds, and high net worth individuals take that capital and re-lend it onto small businesses.
Yeah, first of all, well done, and I hope Ms. Mochidi gets her wish that you find the next SA unicorn. So my question is, your lending model, it's very similar to Sharia lending. Were you influenced by that at all?
Actually, no. So with Sharia lending, because we're actually looking at a potential partner now that needs a Sharia lending product. So we're looking at it. You're right, the actual construct is very similar, but the difference with Sharia product, and we're still investigating, so please don't quote me on it, but from what I understood with the Sharia product, we actually have to hold on to the stock that they're selling. So if we buy a portion of the future sales for a particular stock, we have to actually hold it and own it. So now we're trying to figure out how we're going to surpass that, because essentially once we provide the capital, it's unrestricted and you can do whatever you want with it. So our product, even if you come to me and you say, look, I need to borrow X amount of money because I want to bring in a shipment, for example, and I want to sell socks, for example, then we would provide you with the working capital. We don't actually pay for that particular shipment, right? We'll do an EFT into your account, and it's completely unrestricted. If you want to use it the following day to buy something else, for example, we don't actually track it. So with the Sharia product, it has to be quite specific in the actual stock item, or essentially what they want to do with the stock. And from my understanding, we're just dipping our toes into it. From my understanding, it's quite hard with the ownership of the stock, and that's kind of where the hurdle is at the moment. But we are trying to overcome it, because I think the need for it is massive. Good, amazing. So we're having our legal team look into it now, because I think that if we are able to turn that on, we can help a lot of more businesses, which we're not targeting at the moment.
Idan, a nice model, and Alex from Minka here. I've got a couple of questions for you, actually, if you don't mind. Do you see any particular areas of growth that you're focusing on within SA, sort of sectors, sort of subsectors within the, within your sort of your portfolio? And second question is, do you see any potential issues with the potential impending economic headwinds, global economic headwinds? And do you see as a result of that, your risk profiling potentially changing in the next 6 months, to cope with that change in economic climate?
Yeah, so I mean, our credit models are forever evolving. You know, we do take macroeconomic variables into it. I mean, I'll just give probably the simplest kind of example during COVID, where we were jumping up and down between level 3, level 4, level 5. Certain industries are allowed to trade, certain industries weren't allowed to trade. We actually adapted our credit model to be very flexible and to turn on and off certain industries or certain kind of risk profiles that we don't want to provide credit to, because essentially we provide capital and we need to have, like I said, it's 3 to 12 months in terms, so we need to have 3 to 12 months view forward on a particular business in a particular industry. So to answer your question, we're always on the lookout for macroeconomic variables. I think that a lot of things that happen in the world, you know, at the end of the day, they directly affect SMEs. You know, rising interest rates affecting people's spending powers, and I mean that at the end of the day affects small businesses' revenue. So it's not something that it's something that we kind of always playing with and always making sure that we're not too aggressive in our decisions. So if something happens, we don't kind of take action right away at the beginning. We kind of want to see how it plays out and keep our finger on the pulse rather than be too preemptive, because at the end of the day, we do want to carry on trading and we do want to provide capital and we do want to grow and we want to help these businesses. And when you were asking about your first question, subsectors, I mean, I feel like we've really kind of nailed down the small business, the formally registered small business. Like I said, I think the holy grail in South Africa is to go after the informal sector. That's where I think that the biggest opportunity is. The biggest problem with that is, you know, they don't have a digital footprint, which is the hardest kind of the biggest factor for us not able to provide funding to them, right? So even if they don't use a bank where we can kind of do an EFT into and run debit orders off to collect, how do we kind of penetrate them with a digital footprint? So I know in the rest of Africa that's been solved with a lot of wallets and stuff like that. It hasn't taken off fully in South Africa, so we are hoping, and like I was saying earlier, we are in talks with a lot of mobile wallets that want to penetrate the informal sector, to integrate with them, provide credit there, and hopefully collect through their point of sale system. So that for me, for us as a business, that's where our head's at. That's where we see the biggest pocket of growth and the biggest untapped opportunity at the moment.
Thanks.
Yeah, so I mean, exactly. Yeah, in agriculture, you're saying. Interesting. Yeah. Yes. So yeah, so it's very interesting, and we'll go into it. The reason why we don't love the agricultural space is because, like I said, our funding facility is up to 12 months, and usually in agriculture it's much longer cyclicality, right? So I think as we grow and as we get more access to essentially cheaper capital, we'll be able to kind of extend the term of the facility, and with that start targeting a lot of other industries that currently we don't really play. But yeah, I think the fact that we collect a percentage of future inflows really aligns to the business's cash flows. So at the end of the month, where they got to pay salaries, landlord, electricity, water, all the certain things that come up on either on the 30th or the 1st, we're not one of those other financial burdens which gives them cash flow issue at the end of the month, you know. So we really want to make sure that we align to their cash flow patterns and not add another kind of burden on them.
I love it. Thank you. Is everybody done with the questions? Okay, thank you very much. Thank you so much.
Thank you, thank you.
And thank you so much. You're doing very great, and we wish you the best, and help us find the next unicorn. Thank you.
Thank you very much.